Does silver still have a fighting chance against gold in 2025? And should we be comparing silver to gold? We'll answer those two questions in this video as we explore. Well, there's one area where there's no comparison ever between gold and silver, and that is the dreaded milk spots. I hate them, and they're almost everywhere. No matter where you buy silver from, there are some coins that are just going to milk spot, whether it be eagles or these kangaroos or Britannias and some older maple leafs. You're going to get them. It's just it's inevitable, and it sucks. But nonetheless, you don't get that with gold. So the gold has won that battle. But gold has so far won the battle against silver this year. Yea, though last year, silver won that battle, but not by a whole lot. I'm going to be referencing a piece here from Outlook Business that believes that we might have a fighting chance, and could this be that there is a perfect storm and a setup to catch pace? While gold is basking in its glory at record highs, silver is fighting hard to catch pace. However, it's not just technical signals, but market experts too anticipate a turnaround for the two precious metals, with gold likely to take a breather as silver catches pace. And you know what? I like to be open-minded about that, and I think that is the case, and have mentioned it even in prior videos. But right now, with the price of silver low compared to gold, and with some of the dips that we've been seeing, it's a good time to shop around for the best deal out there for your precious metals, and also customer service. Summit Metals has both. However, you should do your due diligence and just consider them. Check them out to see if the prices are right for you, and their service too. So silver is indeed a metal that we have been frustrated with compared to gold, and I think that is really the crux as to why so many have really been giving up. Some have given up. I've seen it a couple of times on this channel how some people are giving up on silver just because it is not done as well as they think it should. And I can certainly sympathize with that point for sure. But when are we going to see a turnaround? Gold futures on the multi-commodity exchange delivered over 22% returns since the start of this year, far outpacing the 9% returns seen in the silver futures market. On the basis of spot market price, the commodities have rallied over 26% and 13% respectively. Gold prices recently crossed over the critical levels here recently. In fact, it went to an all-time high even when adjusted for inflation. The gap is also visible on the COMEX, where gold futures are currently trading above $3,300, and silver futures are still now below $33 an ounce. International gold prices surged over 25% in 2025, according to data fueled by growing demand for safe haven assets in the wake of Trump's tariff actions. And also silver has gained about 14.5% this year. Of course, we also know that gold has been propped up by central bank buying and continue buying. With its recent bull run, gold as a commodity has reaffirmed its position as a safe haven asset, and more, especially in the backdrop of raging global uncertainties. Silver, however, hasn't managed to garner the same optimism from investors as reflected in its slow-paced growth. In their view, the people at Outlook Business, silver's failure to launch is mainly due to the macro and geopolitical drivers of the past couple of years, being primarily supportive of gold's more widely accepted quasi-monetary properties. According to the Silver Institute, while silver has underperformed its peer, gold is by far a margin till now. The street is now turning bullish for a change in pace of the two metals. To that effect, analysts now expect silver prices to rise faster than gold in the coming years. Following such a rally, gold could take a breather, giving way to silver to outperform on the returns front. Various reports quoted Ajay Kedia, director of Kedia Advisory, expecting on similar lines. And I actually agree with that. There's a potential. Doesn't mean it's going to happen, but I could see several cases where this could occur. Now, one other aspect of this that they're not mentioning in this piece, and I want to acknowledge that we've seen examples of coordinated selling at a certain time, usually before the market open, and we see a lot of that happening with futures trading and the big banks that make up the most of those bullion banks that some people feel is suppressing the price of silver. So keep that in mind too. And another positive trigger working in the background for silver is the gold to silver ratio, which is a gauge which compares the price of the two metals. The ratio has now gone past the 100 mark as the gold prices have surged amid global uncertainties and silver lagged due to sluggish industrial demand. Now, I would normally, especially this year, dismiss that. In fact, logically, I do dismiss that, but I think it still should be something we consider, and I'll get into that in a moment. This is the highest level since the COVID-19 pandemic when gold shot up and the ratio was at an all-time high of 126.5. The 2024 average ratio was 84.8. The gold to silver ratio is a measure of how many ounces of silver are needed to buy an ounce of gold. The ratio has moved past the 100 level only 3 times in the past 50 years, including this time. Whenever the ratio has surpassed the 100 mark, there's been a strong recovery in silver prices as it tends to play catch up with gold. Now I'm going to stop right there because we have been trading in the 80s and above for enough time now, and it has stayed above 100 for long enough time now that I think that analysis can be thrown out the window. In fact, until such a time and changes with how central banks hold gold and view gold, I think more than likely we're going to see an elevated gold to silver ratio, essentially setting up a new normal between gold and silver because it's being propped up by central banks. Gold is, and silver is an increasingly volatile metal due to its more industrial applications. In other words, it's being traded more as a commodity. The gap is expanding between the uses of the two metals and how they are viewed. And I don't think that's going to change anytime soon unless there is just a massive sell-off. And it would have to be a pretty big sell-off from noted central banks around the world. I don't see that happening anytime soon. Higher the gold and silver ratio should help, as some investors might view the white metal as undervalued. Now, I've had to replace, they say white metal a lot and yellow metal, but I kind of don't like those terms. I'll just say silver. Silver Institute had said in the survey, however, if there are fewer U.S. policy shocks, an end to the Fed rate cutting is in sight, and the U.S. avoids a recession, demand for defensive assets should eventually start to slow later this year, and that is possible. And keep in mind, there is a psychological element to it. It is about how some investors view silver compared to gold. No matter what I say on this channel that we should not be using that as a gauge, people will still use that as a gauge and invest accordingly. See it as undervalued. And that kind of trigger could actually send prices up for silver. That's right. In terms of investor sentiment towards, hey, it's a bargain right now. I'm going to go ahead and make a purchase and get me some silver in a physical form, and more than likely, most of those people are going to buy it in paper form as ETFs and the like. So I don't discount that possibility, which is why I will still bring up the gold to silver ratio, but I think smart investors should not weigh on that. I think we should be conservative about it and realize that we are in a new space with gold and silver compared to each other that I think the market is digesting as such. But that sentiment could change based off of perceived undervalue nature of silver compared to gold. Now, even though silver is expected to take on the driver's seat going ahead, is what they're saying here, gold is also likely to continue with its party, albeit at a somewhat somber mood, according to Apurva Sheth, head of the Market Perceptives and Research at Samco Securities, said the S&P 500 to gold ratio has recently broken below its 10-year moving average. This ratio indicates equity market dominance versus hard assets. The ratio's breakdown indicates that gold is once again emerging as a store of value in a world with overvalued equities and geopolitical unease. You think? Yeah, that's for sure. That has been noteworthy since 2022, and maybe even to some extent before that. So yes, that is quite the thing we're looking at. In the last 50 years, such a breakdown has occurred only twice, and each time it marked the beginning of a major bull run in gold, Sheth said. Earlier, gold rallied to the tune of 2 to 3 times. For investors, this is not just a technical signal, it's a strategic alert, he said. Multival Oswald also echoed similar optimism and continues to maintain a buy-on-dip stance on gold. And I tend to agree with that as well, too. I'm still more heavily weighed on gold than silver as far as my personal portfolio, but it's not because I'm not bullish on silver. Investors can start accumulating near support zone for the long-term targets, the brokerage said in their report. While some cool off and gold prices cannot be ruled out after the sharp rally over the last couple of months, there are both positive and negatives for gold prices in this juncture. And that is always the case, right? I think that's a no-brainer. Tariff tensions, higher inflation expectations, rise in slower growth concerns, rate cut expectations, geopolitical tensions could act as tailwinds for gold, whereas any updates regarding ease off and any of the mentioned uncertainties could put further pressure on bullion. And that's always the case. We never know what's going to be around the corner, and that's why I don't focus too much on technical analysis here, because it's amazing how much the day-to-day drivers for gold and silver weighed on by what the Federal Reserve does or says, or economic numbers, or geopolitical situations, sentiment regarding employment, all these different things, and how the stock market reacts, and in tow, gold and silver will react as well, because they all base their movements off of the strength of the dollar compared to other currencies out there. Now, likewise, for silver, media reports quoted Ramesh Varakadar of ICICI Securities expecting silver to cross the $35 mark and potentially reaching $40 by the end of the year. In fact, other analysis that I talked about said that we could see $40 silver by summer and $50 by the end of the year. I think this is much more a conservative approach, and I could see this happening. I'm sticking with my prediction of $36 silver by the end of the year. Silver investment has faced conflicting forces so far in 2025 due to its dual role as a precious and industrial metal, worries about escalating trade wars, and a correction in U.S. equities, along with recessionary fears and geopolitical tensions, have all raised the need for portfolio diversification, and silver serves this purpose. And as an addendum to that, I'm saying that very well could happen, because even though usually as a dual role, that means that there's polar opposites in terms of price movement. We could actually see it move in tandem with one another. Yes, it could go up as a precious metal as well as up as a commodity. And that would mean how it could outperform gold. And if that happens and in force, well, watch out, gold. Here comes silver. Let me know what your thoughts are in the comment section below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.